The pound falls after Liz Truss's U-turn as IFS warns piecemeal changes won't cut it. October 22. The pound falls after the UK's fiscal watchdog meets Liz Truss and Kwasi Kwarteng as it happened. October 2022. Sterling plunged into chaos as the Bank of England forced into bond sale denial. October 2022. And as you look through October 2022, you can see that the pound went straight up. You see that? October 2022, the pound went straight up. Headlines: plunged into chaos. Fiscal watchdog concerns. IFS warning. IMF was even come out with warnings. So in other words, that massive talking head sell and this massive volume candle you see here ties in perfectly together, don't they? Does that make sense, Simon? So all of these talking heads that are dooms and glooms, and all of a sudden you see this massive volume coming in. You say, well, with all this bad news, who the hell would ever want to buy this stuff? Me. I would want to buy it because relative value was good for the pound at that stage. And it was all the doom mongers that were causing the pound to be massive buy-side value. All the doom mongers causing it to be massive buy-side value. And all what happened with the pound was we went from a low price of 104s, 105s, 106s to where we are today at 123. 123. An enormous macro buy-side bounce on the pound, right? Now, if you saw those headlines, they're frighteners, aren't they? If you saw those headlines, you're thinking the pound's going to go to 0.8. It's going to go through parity without any doubt about it. No doubt about it. It's going to go through parity, and it's going to crash. And everybody's doom and gloom. And all of a sudden, you found that the pound goes straight up on those headlines. Straight up, following those headlines. Crazy, isn't it? Well, the same thing happened on Bitcoin, and you remember this one probably even clearer because it was such an unusual situation and we don't cover Bitcoin very often, is that Bitcoin was trading at 69,000, and I took all the screenshots from Standard Charter. Bitcoin priced to hit 100,000 in 2021 or early 22. Standard Chartered. Standard Chartered, for God's sake. A major player in the world of banking. And they say it's going to hit 100,000 in 21 or 22. Brilliant news, right? Crypto price prediction, Bitcoin could hit 100,000 before the end of 2021. Another crypto price prediction from Forbes magazine. Forbes magazine, one of the most respected investment journals in the industry. Bitcoin price prediction model still intact, despite failing to hit £100,000 in 2021, according to Plan B modelers, who said it was going to the $1 trillion mark. And then obviously McAfee, I don't know why I bothered to include McAfee, except for the fact that McAfee at that stage was thinking that Bitcoin was going to make this $1 million Bitcoin by 2020. Remember him, McAfee? Sure. So McAfee explains rationale for why he still sees $1 million Bitcoin by 2020. That was an article, by the way, in 2019. So here's some big names, some big hitters, some big respected institutions and players, all saying 100,000 to $1 million. Bitcoin promptly sold off when we called it. As you know, we called this at $69,000 a Bitcoin, and it sold off to $16,000. So why are we showing you this outside of a bit of fun and a bit of jolly? Because the market is full of frighteners every day. Massive volume up candles, massive volume down candles. Do you not think these types of things create massive volume up candles and massive volume down candles? Do you not think that's the blood in the streets narrative? I'm not talking about breakout trades. I'm not talking about high volume and a breakout low. That's not what I'm talking about. I'm talking about high volume at a swing low that isn't necessarily a breakout. I'm talking about high volume at swing highs following an uptrend. These are the kind of blood in the streets type narratives. When everybody then sees it and everybody's missed it, and all the people that have missed it suddenly decide they want a piece, now's the time for me to sell it. Just like the delta on your oil. When the oil's been going higher and there's no buyers, and then the oil's going higher and there's not a lot of buyers, the book's bullish, but there's not a lot of buyers. Not all the sellers either. Oil's going higher, not a lot of buyers. As soon as there's too many buyers, I want to be a seller. Does that make sense, Simon? Michael? Theo? Does that make sense? I want to be a seller when everybody now wants to sell, when everybody wants to buy it. Well, that's exactly what happened at the top edge of oil when I sold it. Take a look. Is that not the headline right there on the right-hand edge of the charts? Is that not the headline? When everybody bought it and everybody's shouting about the fact that there's a massive, massive upside on oil and everybody buys it. Sure enough, that's when I sold it right into this dude up here. That's when I sold it up here. Agreed? And remember, I sold it over here as well. Remember, I sold this guy. Remember, I told you I sold the 33s? Well, that was my sell. So I seen this dude again getting exposed with this massive ramp up. Now, the book was bullish at that stage, so everybody agreed that it was a buy trade, so I'm not going to stand in the way of that. But when they started to disagree that it's a buy trade, I then sold against that guy there. And I made us a very nice profit on the deal. So in other words, when there's blood in the streets, it really is a buy opportunity on a micro and a macro chart basis. Would you agree with that? Of course you would. You've seen it. You've seen it so many times. When there's blood in the streets, I want to buy it. When there's blood in the streets, I want to sell it. Obviously, we trade both sides. Obviously, the blood in the streets narrative is relating to stocks, specifically in the stock market, okay? So you can see that this article, these articles, the date stamps, the comments from some independent journals, from independent headlines, this is what people see in the retail space. This is what people see on the desks of many prop desks as well as commercials. They see these headlines and they buy into them like mugs. They think the headline is going to help them. The headline's already happened, remember. None of these headlines ultimately happen without consequence. Somebody sees something, somebody hears something, and they react to it. So when Kim decides that she's over her bug, and she says, "No, I'm feeling great," she'll immediately start to feel better. I'm not saying she'll be great, but if you immediately if you think you feel better, you will feel a little bit better, and it might just start to become an element to your recovery. The more you feel like shit, the more shit you will feel. It's as simple as that. It's the Hurst exponent in terms of psychology, isn't it? So when we kind of see this idea, this is exactly how this develops. Sellers beget sellers, beget sellers, beget sellers, and then when you get a big surge, and everybody's now talking about the sell, now's the time to buy it. Everybody's talking about the sell, now's the time to buy it. Now, why am I mentioning this? Because it's important in the market maker's game that we're going to do this afternoon. Very important as part of the market maker's game that we're going to play this afternoon. Make sense? And there was one other chart I wanted to show you, another tweet. And I don't recall anybody actually mentioning this, and I'm quite surprised. I thought some of the more senior members among us would have highlighted this, but I remember looking back and I was like, nobody's picked up on this. I wonder why. So I want to just go back over this tweet so that you can pay attention to it in the future. You're like, oh, we're in trouble again. So when we look back at this as a picture, what is significant about this picture here, guys? What's significant about this tweet? Equity traders, I would expect you guys to have a better answer to this. Take a look at this tweet and tell me what's significant about it, because nobody mentioned it. And I'm surprised nobody mentioned it, so I want to bring it to everybody's attention so you can pay attention in the future. What's significant in this tweet? We gave you the levels, obviously, the key levels. What's significant about that? But would you have noticed that if I haven't mentioned it, Simon? Would that have become significant for you if you hadn't mentioned it? If I hadn't now mentioned it? Exactly, right? So it's incredibly important, is it not? Is that not an incredibly important comment to make? Because if you think about it, volatility remains the same. Interestingly, they have flipped the implied volatility in the calls higher than the puts. When does that ever happen? Well, not very often, but on a 24-hour basis, it happens more often than you think. The implied volatility on the calls actually is going up, not down. In other words, they're making call options very expensive, yes? So in other words, the S&P has suddenly become a demand market. The S&P has become a demand market. Why? Because there's obviously, if they're making calls expensive, there must be demand for calls, right? There must be actual market demand for calls. That's why things become expensive. Demand for something. If it's just demand for volatility, of course, that's something different. That means we're going to get a volatility expansion, and it could be bullish or bearish. So we can see that this call flip, 20.8% on the implied volatility on the calls, 18.1% on the implied volatility on the puts, suggests that the market has suddenly gone more bullish than bearish. Well, what happened next? This is what happened the very next day, right? Does everybody remember this? So was it significant? Was it something you look at and say, oh my God, that wasn't good, that was unbelievable? Well, the answer is sure. But in addition to that, obviously, you can see that the implied volatility at the 20s compared to the current implied volatility at the 10s, you can already start to recognize that there is a big drop-off in volatility analysis, which is another piece of your studies, isn't it? So the volatility analysis starts to drop down again because you're starting to think to yourself, well, we're now expecting perhaps a little bit of Monday consolidation coming into today, yeah? We're starting to think that there's going to be a little bit of consolidation coming into today. And as a result, we can chill down a little bit. We can start thinking about possible rotational business and the like. So this is giving you a massive heads-up piece of information there. You'll not normally see me mentioning this, right?